if you're trying to make a 5x, not inflation adjusted, like 5x in today's dollars, very reliably on like a 5 to 10 year time horizon, like buy Ether. Buy Ether. This thing is absolutely growing to global ubiquity. There's a lot of evidence that the lion's share of it's going to be on Ethereum. There's a growing body of evidence that all this L2 activity is extremely good for both L1 product as well as Ether as a store of value with utility. Just buy Ether. You're buying the future of capitalism. You're buying an asset that, until recently, and perhaps even still, undermarkets its own accomplishments and its own ambition. And so, regardless of where prices go, we're headed to multi-trillion ETH, in the coming years.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show spotlights Ryan Berckmans, an Ethereum community member and ETH investor. So we had an episode back in April with Ryan. This coincided with the worst part of the market drawdown. ETH was around $1,500 to $1,600 when we were recording. It was brutal. Since then, a lot has changed, including the price of ETH rallying almost 3 times from where it was back in the spring. We wanted to catch up with Ryan because we still feel that the price is lagging behind the fundamentals of Ethereum, the network, and ETH, the asset. We wanted to get an updated conversation with him about what's changed since then and what might be the next catalyst for the next move up in the price of ETH.
Yeah, we tried to sort of piece out some of the big narrative movements that I think were the backbone of this most recent price surge. So, that first conversation we had, what were the key catalysts or drivers, sentiment drivers that led to this sort of repricing over the last, I think it was 5 or 6 months since we spoke to him.
One point we covered in the last podcast that I think we touch upon in this conversation is what's necessary for ETH to appreciate in value. Like what needs to happen next for Ethereum, the network, to grow in value. And I think he gives a very reasonable, pragmatic timeline for, what we can expect in the next 5 years or so.
And more on the technical side, we talk about the Fusaka upgrade that's coming. I think it's slated for December 3rd right now. So he kind of breaks down what that is and what that will mean for Ethereum as well.
So just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to stay updated on new podcasts and new posts through the Edge newsletter. You can go to our link tree at edge_pod. That's the best place to subscribe to the Edge podcast on Spotify, Apple, and YouTube. And then a quick shout out to all of our sponsors. They are the ones that make all this content possible. We have awesome sponsors like TOROS Finance and REDSTONE. And otherwise, we hope you enjoy the episode. Grow wealth exponentially. With TOROS leverage tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leverage tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to Redstone for supporting us here at the Edge Podcast and Edge Newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with SYRUPUSDC by Maple, anyone can earn institutional grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. FALCON Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. NEUTRL is the next generation of crypto native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta neutral strategies to deliver premium, stable returns without taking market direction risk. NEUTRL is currently live in private beta and will be opening for public deposits soon. Learn more at neutral.fi. All right, let's introduce Ryan Berckmans, an Ethereum community member and ETH investor. Ryan, welcome back to the Edge Podcast. How are you doing?
Thanks for having me on the show again, guys.
So we last recorded an episode with you on April 16th, 2025. The price of ETH was close to $1,500 to $1,600. Since then, it has nearly 3x'd in price. There's a lot that we called out in that episode. A number of those major themes or narratives since then has been around ETH digital asset treasuries. We've got the likes of Tom Lee and Joe Lubin and Joseph Shalom, who are very prominent in the mainstream media talking about the value of ETH. We've seen a total sentiment shift around ETH and Ethereum. I think it was probably in the worst place I've ever seen it since 2018. And now I would argue it's probably in the most bullish place I've seen it since then. We've got an Ethereum Foundation that has a very united front. And seemingly all of the different narratives that we've talked about selling to Wall Street for years has, finally taken hold. So we're going to try to talk about all of that. We've got the best guest in the world to help us dumb this down and understand what has changed, and also why are we still in a place where we can go so much higher in terms of the value, the price of ETH, the value of the Ethereum network. So why don't we just start more, Ryan, with what are some of your favorite catalysts over this last 6 months? Who do you give the most credit to, or what things do you give the most credit in terms of changing the sentiment?
When you look back on the 6 months, the price action has been transformative. The sentiment has been transformative, but also some of these fundamentals we've been talking about for years, some of these growth curves and growth patterns have really begun to mature. And I look at things like the new administration courageously embracing stablecoins as a massive buyer of U.S. treasuries. Regardless of your politics, it should not be controversial that stablecoins are good for America. Over 99% of stablecoins are U.S. dollars on chain, and that is a market response. Nobody centrally planned the U.S. dollar dominance on chain. That represents the world's belief and faith in America and the U.S. dollar. And so having a policy that's consistent with that market demand, given the potential long-term upside, not just to buy treasuries, but to distribute the U.S. dollars into more and more corners of all the commerce of the world, permissionlessly without requiring these top-down international trade agreements to do so. It's just an extraordinary catalyst and one that has been too long in coming, given the obvious upside for America to embrace Ethereum and stablecoins. And, it's not just about stablecoins. Ethereum stands for property rights, permissionless innovation, and freedom. Who does that sound like? Sounds like America. And so the next big catalyst would be, of course, our welcome new and sort of reintroduced friends at the digital asset treasury companies. It's not just that these folks have bought billions of dollars of Ether and will continue to do so. It's that they represent a new coalition and separate political parties that can have views on the network and have views on the roadmap and can tell our story to a new and expanding audience that they understand. And through their participation, that they choose to spend their lives doing this in the positions they're all in personally and their opportunity cost, what it says about their belief in where Ethereum's headed. Look, for example, Joseph Chalom, who spent his career at BlackRock. Like, this guy, no doubt, could have retired to the Hamptons and wherever he wanted. But he says, you know what? I'm going to have a second career here. I'm going to help Ethereum grow to global ubiquity in a partnership with co-founder of Ethereum, Joe Lubin. Like, this is a really big statement for a person like that who's achieved so much to make that commitment. And we're going to continue to see dividends paid by these DATs, and it will always be the flows and the buying that gets the most headlines. But I'm most excited about the increase in political diversity and knowing that these DATs are going to have our back, not just in the downhill times or the easy times when the wind's at our back and we're sailing up to the moon, but also in the tough times when, for any number of reasons, prices could be down, sentiment could be down, there could be, setbacks of various flavors. And it's going to be these organizations that have our back. And, I think when their MNAV drops far below 1, we should have their back too. And, personally, an intention of mine is, while I don't, dabble in stocks much, I look forward to the day that I can buy, for example, SBET on chain that, should bad times return for any reason and that SBET dips way below the MNAV, I want to be there in public supporting them, not just in the narrative, but financially, because I know that they're supporting us in the halls of power in Wall Street and around the world. And so, really, really exciting catalyst in those DATs.
Tom Lee was an incredible force for, I think, pushing forward some of the big talking points that maybe people in the Ethereum community sort of failed to package up in a easy to understand way. But I want to take it back even further because I think there's somebody else that had fingerprints on all of this messaging. And I want to shout out Vivek from Etherealize. He was saying all the, and many people before even Vivek, people have said this before. It's not like an original thought to be like, hey, let's link stable coins to, Ethereum's trajectory or anything like that. But he was doing this messaging on Wall Street, and I think very effectively, and he was putting out some incredible blogs and reports. So I want to throw this one to you, Ryan, as well. Maybe speak to the importance, while talking about these narrative shifts, the importance of Etherealize in all of this as well.
Etherealize is this keystone of Ethereum's growth strategy going forward. They occupy this very special position in the ecosystem where they have an extremely high-quality, world-class team that's moving extremely quickly, and they operate at the intersection of Wall Street and government in both the investment lens and the product lens. And not only are they doing direct product work that is going to result in tokenization of new real-world assets, the launching of new L2s, common knowledge formation of how cutting-edge Ethereum architectures are like for L2s and tokens and protocols are like not science fiction, but will soon enough just be ordinary global infrastructure. But they're just doing this incredible blend of product, political, and investment work. And I'm grateful to have Etherealize in our community, to provide leadership, to grow us directly, and to help inspire us to be more cross-functional and break down those barriers between the different parts of the community so that we're all talking more and on a united front.
So back in January, I think it was January, we had Etherealize on our podcast, and at that time I was like, okay, yeah, these guys are just a new BD arm for Ethereum. But I think I had not realized all the things that they were working on. So I really want to see some of these products that they're going to bring to market, because they are building products and they raised $40 million to do so and push this stuff forward. I know they're working in the tokenization space. I think there's maybe some privacy stuff. I'm just really eager to see what this materializes in, because it's way bigger scope than I initially thought. Something else that I'm seeing materialize, and when we spoke back in April, we started to see Ethereum Foundation team cohesion starting to happen finally. But we've just continued to see that since we spoke last. And it just seems like it's turning into a well-oiled machine, finally. I mean, it's just, I don't want to say finally, like it's always functioned well, but I think it's attained another level of execution recently with all the things that they're doing and the hires that they're making. I call out Benji as one that I've just seen doing fantastic things for the DeFi ecosystem. But yeah, I want to throw that over to you, Ryan, as well. That's kind of like my perspective. What have you felt with this like growing cohesion with the EF?
Yeah, I mean, the EF this year, since approximately April when we filmed last, I mean, my goodness, the level of execution and the level of strategy. I think we're seeing the EF evolve into a more pragmatic, in-touch organization that is aware, willing, and able to do what needs to be done to capture our substantial opportunity space in many, many layers of the stack and different areas of the ecosystem. But while ardently, while steadfastly sticking to the principles that Aya and Vitalik and their leaders have very carefully and intentionally cultivated in our first 10 years. Chief among them, credible neutrality. So I'm just so bullish on the EF this year. It's really exciting. You can even, I think, if you're chronically online enough, or you can see a clear sequence of events between problem identification and 3 months later, they have a new program or a new, an expanded philosophy. It's just terrific. They have new institutional teams. They have folks working more closely with founders to cultivate net new innovation and new app categories. Obviously a growing admiration and involvement in DeFi and other parts of the app layer. Their new strategy, the EF strategy, revamped strategy is they do three things. They scale L1, they scale L2, that means blobs, and they improve UX, and that means interop and a few other things. And crucially, like scaling L1 doesn't just mean block space. It means institutional adoption. It means putting the right irons in the fire so that when the next big app category emerges, look how big Polymarket is now. I think at their most recent round, they were valued at $3 billion. And it's true they're built on Polygon proof of stake, a side chain that's working towards becoming a Validium L2 on L1. But like Polymarket's an example of a really big deal. And there are other examples that, I'm not, or maybe not as visible, that I'm not here to show. We want to make sure that innovation, when it inevitably occurs, is happening chiefly on Ethereum, and that we're excited and we're discovering it, we're cultivating talent. And the EF is now playing a leadership role in there, where before I would have described them as being more somewhere between unaware and ambivalent, feeling it wasn't their role. And so I could not be more bullish and grateful for the EFs, for the modern EF, and as well as, for, again, like I think Aya has taken too much flack. Like they started hiring Tamaz a year before he was announced. There was some delays, negotiations. The lawyers had lots of work to do in all these different countries they operate in. And so here we are calling for Aya to step down, and like she's been orchestrating her own replacement 9 months before that. So I think we should be grateful and to have our, to the extent it might have been diminished or cracked or fractured, have our trust in the EF restored in the seasons to come. As well as, I think, an important, offset there, kind of a dual, a balancing factor, is that every season the EF gets less important. And that's the most bullish thing. That's the subtractive philosophy. We have all these new stakeholders: Robinhood, Coinbase, DATS, Etherealize, and there's going to be new stakeholders rising up. And so just could not be more bullish on both the EF itself in terms of strategy and execution and culture, as well as this ongoing political and operational diversity across the whole space. So yeah, big green check mark for me.
One of the things I've noticed just in the last year is the platform that is Ethereum, the network, has gotten so big that it is impossible to keep up with all that is being built if you're focusing on infrastructure, apps, whatever. A good example, Vitalik just wrote this post about low-risk DeFi, and he talks about what he believes is really a meaningful impact on the world thanks to very foundational applications of DeFi. And one of the things he called out in the post was around under-collateralized loans, that this could be huge for greater financial inclusion. And the funny thing about that is that even though there are, I'm sure, tons of other projects that are working on this in stealth, one project that we recently had on 3Chain is live on Ethereum mainnet, and you're able to basically open up a credit line. So I'm reading this, this post by Vitalik, and I'm excited, not just because he's talking about this dream scenario that we need to build this out and it's going to be huge for growing DeFi and huge for Ethereum, but I was excited by the fact that he wasn't aware of this, because it's proof of what you just mentioned, that the network has grown to a size. There's so many folks that are working in this economy as they should, working towards a greater cause, a greater purpose. And at the end of the day, I think it's proof that Ethereum is this incredible, radical capitalist experiment. Allow the incentives to play out. There is no hand of God to save any application at this point. The EF is not picking winners. It's probably then a good time for us to talk a little bit more about this low-risk DeFi post that Vitalik put out. To your point, for years, EF and I believe Vitalik lacked enthusiasm or awareness for what was being built on Ethereum. They called out a lot of really interesting use cases, but for whatever reason, they did not lean as heavily into DeFi. I believe it's somewhat a reflection of the era of Gary Gensler and having to just stay as uninvolved and quiet on any sort of financial use cases as possible. But they are now demonstrating an enthusiasm. To me, it would be like Nintendo not being excited for the games that are built on it. You have a bunch of genius engineers who have built this incredible platform, but they're just not excited for the games. Ethereum, the Ethereum Foundation now seems to have hired the equivalent of the gamers, and they are excited to be there. They're excited to do the job of EF, but they're excited for the games, or in this case, the applications that are being built on it. What can you tell us about Vitalik's change in attitude? What is this low-risk DeFi that he's referring to? How do you explain his thesis to the audience?
I love this question. It's my favorite topic of conversation, period. That and, what app categories will be big, in 2 years that don't exist today. And low-risk DeFi is such an incredible term because often the best memes take two things people understand and just glue them together. Digital gold, digital oil, low risk. Okay, risk. All right. DeFi. All right. We've been talking about DeFi since 2020. It's 5 years old. Pretty good phrase. A phrase that has gotten co-opted often by centralized on-chain finance. And so low risk DeFi taking us back to our roots of decentralization. And so why is this so cool? Understanding Ethereum is simple, but not easy. What does L1 do? It minimizes risk. What is the value of risk minimization? It turns out it's extraordinarily valuable. If you look at all the different problems and all the different kinds of friction in the world, to conduct economic activity, whether you're just selling hot dogs on the side of the road, or if you're doing e-commerce, low-value e-commerce with your Etsy customers, or all the way up to big corporations and governments and agreements between nations. Friction rules the world. You can't get more commerce done than you can trust, than you can overcome the costs of just doing business, whether that's insurance, theft, complexity. I worked at a fintech company a number of years ago, and we signed a debt facility to borrow money institutionally, which we were then going to relend out to consumers. It's a buy low, sell high business, but for interest rates. And like the agreement for the debt facility is hundreds of pages long. And so this friction rules the world. And when Vitalik says low risk DeFi, he's not just saying low risk DeFi. He's saying low risk, low friction, permissionless, global, automatic, interoperable. Like that low risk is like the headline, and then there's all these other benefits. And this package of benefits cannot be separated. Like that's why if you take EVM and you go launch an L1 and you say, all right, we've got ERC's transaction model of the whole thing happens or it doesn't, like a database, like an SQL database. We've got wallet infrastructure. We've got, we redeployed Uniswap and Aave. We're ready to go. Okay, but without the low risk piece, you're putting a massive drag coefficient on all the other line item functional benefits. And so low risk DeFi is the canary in the coal mine of Ethereum's global ubiquity, because low risk turns into low friction in the broadest sense, and DeFi turns into economic activity in the broadest sense. Today, we look mostly at lending, and that's going to continue to just grow to trillions. It's going to be so much more than we can even imagine, even those of us, for whom imagining is like kind of a slice of our main job. And so, low risk DeFi represents Ethereum's gateway to trillions, to Ether as a multi-trillion-dollar asset. We're going to start with low risk DeFi. We're going to teach the world the value of decentralization, the value of on-chain, and how risky on-chain is without decentralization. We're going to start with lending, and we're going to move into uncollateralized lending, identity, all forms of identity, like the famous zero knowledge proof examples of you show up at the bar or the club and you say, you don't give the guy your driver's license that maybe he snaps a photo of it. You just give him a ZK proof that says, look, this ZK proof attests that the state of California says I'm above 18. I might be 26, I might be 51. You can guess, you don't have to know. Or 21, I guess, in the state of California. So, this low risk DeFi is the gateway drug to Ethereum eating the economic world. This is very, very exciting.
One thing I just also want to call out is, DeFi has essentially been, in my mind, the killer app, the biggest breakthrough for Ethereum for many years now to me. And, DeFi has its roots back to 2020, even earlier than that, 2019. And I'm sometimes amazed just at Vitalik's ability to not lean into something that maybe he's not comfortable with or fully agrees with at a certain time, even though it was the main profit center for his chain that he built. He's just so incredibly principled that wasn't a motivating factor to give it his, stamp of approval. And it's kind of amazing. It's like, it's almost like a feature and a bug in a way. Like, it drove me nuts for so long, but I incredibly respect it as well that he wasn't ready to kind of like acknowledge it. And you do want a principled leader kind of at the helm, and not to say that he's in control of Ethereum, but I think just that those guiding principles are incredibly important to Ethereum. Just the fact that, the biggest profit center of the chain wasn't fully acknowledged till now. And again, it annoys me, but I'm also impressed by it at the same time, if that makes sense even.
Yeah, me as well. We are living through the historic era of the rise of civilizational infrastructure, as Joe Lubin calls it. And the more time I spend here, the more I realize that the people who have begun the process of building Ethereum that now is increasingly distributed and decentralized, they are benevolent geniuses to a degree that will probably only be fully appreciated by economic historians, like when we're long dead. Like these are like Vitalik's like an Isaac Newton type fellow. He deserves the in due course he will have earned, and I think win at least one. And this has been said before. And my buddies and I were saying this in 2019, 2020, the Nobel Prizes in both economics and the Peace Prize, because the force for good that a trusted economic system, truly trusted by being trustless and decentralized, it's going to be so hard to calculate. They say that you don't go to war with the country that, makes your stuff, and that globalization has been one of the greatest forces for peace and prosperity. And it's true, but globalization is limited by the extent of the market's ability to transact over all these little nooks and crannies of, the many, many competing global interests. Ethereum's going to change all that. It's going to change all that. So these guys are geniuses, and they're benevolent, and we're so fortunate. And I have no clue how to build civilizational infrastructure. I'm lucky that I can see a little bit of it coming. And so the more time I spend in this space, I just have gratitude that not only did these guys nail it, they took our shit for years when we thought they weren't nailing it. And they took it with grace. And, when the facts change, they change their mind. And sometimes you don't know they changed their mind for years because they want to make sure they get it right. And they're thinking, not next year. They're not thinking to the next big bull run. They're not even thinking trillions. They're thinking, how can Ethereum be running the global economy to the benefit of humanity writ large for decades, hopefully centuries? So just so much gratitude for the leadership we've seen from our best people.
This episode is brought to you by Mantle, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, Mantle is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow Mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi.
When ETH was underperforming, there was all these people, rightfully so, pointing out just how much it was underperforming versus other assets. And I think that's totally fair. Hey, there's a lot of people looking at this stuff purely as a trade. But, I think when you truly believe in a movement and believe in something, you're actually looking at it through a different lens. It's like, again, it just comes down to that saying, believe in something. There's other reasons to hold investments, and it's like, it's a combination of the two. Don't get me wrong. This isn't, I'm not holding ETH just for some, puritanical belief. I want to make money on it. But there's this like weird combination of the two. And I think the other side of that equation always just gets kind of thrown to the side. Whereas, a lot of loud voice traders just want to come in and be like, oh, well, you underperformed, like stupid, like dummy, like what are you doing? And there's just, to me, there's always more to the equation than that, if that makes sense.
Yeah, it's such a great sentiment. I totally agree. And when you believe in something, you can hold an asset because you want to, as Adam Smith, the founder of modern economics, said, you want to be loved and lovely. And owning something that you believe in, that you think is going to make the world better, is a wonderful thing. When you think you can make a lot of money on it, it's that two sides of life coming together. And Ether is an incredible investment at today's price. I'm not saying the price is, not going to go down or immediately up. I'm not making a short-term prediction, in this sentence. What I'm saying is that, all right, you got people in the trenches who are coming up. They're young. Maybe they're trying to make 100x on their stack, and they're trying to make it quick. Okay, good for them. If you're trying to make a 5x, not inflation adjusted, like 5x in today's dollars, very reliably on like a 5 to 10 year time horizon, like buy Ether. Buy Ether. This thing is absolutely growing to global ubiquity. There's a lot of evidence that the lion's share of it's going to be on Ethereum. There's a growing body of evidence that all this L2 activity is extremely good for both L1 product as well as Ether as a store of value with utility. Just buy Ether. You're buying the future of capitalism. And you're buying an asset that until recently, and perhaps even still, undermarkets its own accomplishments and its own ambition. And so, it's great financially, and it feels good to own Ether. So, it's been one of the great joys of my life participating in our community.
So the price of ETH is up about 3x since we last talked. But I want to know, why is ETH still undervalued? Walk us through your thesis. Why is ETH undervalued?
What it comes down to is on-chain is going to eat the economic world. When we look at these awkward early teenage years of Ethereum, I think there was this view that, for example, Bitcoin was most of the party. And even today, Bitcoin dominance is quite high. And if you look at the penetration of on-chain into the broader markets, and both from an investor consciousness standpoint as well as the products and the growth, like it is very clear to pretty much everybody in the space that on-chain is going to grow like 1,000x or 10,000x. There's going to be 100 times the protocols, 10,000 times the market participants and distinct real-world assets and tokenization issuers, and billions of users instead of wherever we're at today, depending on how you measure it. And okay, so everybody agrees on-chain is going to eat that economic world. So what's the disagreement? Well, I think the disagreement is basically two things. It's the balance of Bitcoin dominance in that world, that destination and direction we're traveling to on-chain growing to global ubiquity. What is Bitcoin worth in a world where on-chain is so much bigger? Bitcoin proponents will tell you, well, Bitcoin will always stay on top, and so as on-chain grows, Bitcoin will grow too, and Bitcoin dominance will stay about where it is today. It might go up a bit in the Bitcoin bull case. That's kind of what they think. Personally, I find that to be implausible. I think that when on-chain grows, 10,000x, that it's going to highlight to the world that on-chain is the level up for humanity. And I think that's going to have an investment impact in terms of how people are seeing these assets. And so, okay, that explains why my view is that Bitcoin dominance goes down in the years to come. But we still have to talk about a couple other things. We have to talk about Ethereum dominance relative to other tokens, including other competitors. And then we also have to talk about total crypto market size. So total crypto market size, today about 4 trillion. Again, I think anyone involved tends to get the sense that it's very plausible that this thing can grow, towards digital gold, towards physical golds. And I think it's upward around 25 trillion now. In some analyses, we post numbers bigger than that based on comparisons of other major asset classes or economic phenomena across even the centuries. If you look at large innovations like railway or the rise of internet or mobile or e-commerce. And so the idea that the total crypto market size of 4 trillion is going to get much bigger, I think is generally plausible to people. You're not making your money on your Ethereum investment from that prediction. So really where you're going to make your money is the prediction that Bitcoin dominance goes down, and then the prediction that among the other stuff that's not Bitcoin, Ethereum dominance will stay constant or grow. And there, the argument transitions to the product side of this, kind of interdisciplinary industry we're in. And so on the product side, as new entrants come into the space, what options do they have? Broadly speaking, and this is not like a perfect taxonomy of your menu of options, you can launch something on the Ethereum L1. You can launch something on an existing Ethereum L2. You can launch your own L2, or you can do something on another L1 and anything else they have going on. You can launch your own L1. You can use an existing L1. Those are the options. So again, in Ethereum, 3 options. Use L1, use existing L2, start your own new L2, or you can do all 3, right? And like some of the big companies are doing that, like Coinbase. They have free USDC payments on Arbitrum, for example, would be an example of that. And they have their own significant tokenization like they do significant business on L1 beyond just settlement. And so why would someone, when we want to predict a rise in Ethereum dominance, why are people going to be choosing the Ethereum side of the menu? It's because it's a better option. It's a better option. On L1, you have low risk everything, and reducing risk is worth real money, because the wealth creation benefits of using on-chain to turbocharge commerce and finance only are achievable when it's not too risky to bring it on-chain. Like you can't just say, all right, we're doing $10 trillion in economic activity. Let's bring it all on-chain. Okay, if it's too risky, you can't bring it on-chain. If you can't bring it on-chain, you can't realize the benefit of on-chain. Low risk is valuable. And that's not just a theoretical argument. We see that in the data where Ethereum has approximately a 3/4 share of all app capital in the space. And it's like way higher if you exclude Tron with their success of stablecoins in developing markets, a success that's starting to curb a little bit now because of their centralization. And so the L1 is great for low risk. Starting your own L2 is great for control and customization and political scalability. I mean, we got Alibaba subsidiary, Deutsche Bank, Coinbase, Robinhood. Those are just like major L2s. And then we have like secular vertical specific L2s like Immutable X. That Immutable X does business with like most or many of the largest billion-dollar gaming companies in the world. And so, like, starting your own L2, obviously working out. An amazing deal. In fact, it's such an amazing deal that there will be more L2s than there ever could have existed L1s, because L2s are cheaper and easier to create. They allow you to more directly capture the benefits of on-chain while remaining part of Ethereum from a security and interop perspective. And so, not only are L2s like better than L1s, they're so much better that people are going to like prefer, buy more L2s than they would have L1s if L2s never existed at all. And so when you compare those options to the L1, you just say, all right, most of this growth is going to occur on Ethereum. And then you can, start to argue about, all right, well, is there actual value accrual to Ether? Like, good luck presenting the bear case for that. It's not going well for you so far. And, I won't get into that at the moment, but this idea that Ethereum could succeed, but not Ether, is just like not supported by the theory or the data or by Bitcoin's success, like being a pure confidence-based asset. So it's just wild how good an option Ethereum is for serious use.
Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions with battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs. Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
The main item left to talk about, why Ethereum is so defensible and why it's undervalued today as on-chain is growing to global ubiquity is these modern crop of Alt L1 startups. You have significant firms like Paradigm, Stripe, Tether is planning on launching, I think, an L1 called Stable. There's Plasma. There's Circle's Arc. This is like a modern crop of L1s that sees themselves as like the next big Libra fintech play. Now that the L1 business model has been, in their view, blessed by new regulatory environment. And so what is wrong with these L1s? So what it really comes down to is that, yes, it's true that achieving, for example, Tempo's 10K TPS target is difficult to do on L2 today because in an optimistic rollup, it produces too much data for the 10K TPS. And in a ZK environment, the maturation of the whole ZK stack of real-time proving and the Validium code bases that can do the real-time proving while having a good off L1 data availability could be IDIN-DA, could be Corporate Data Availability Committee, could be kind of like, trust me, bro, we put it in Amazon S3 or Google Bigtable or whatever. Those next-gen high TPS architectures are still coming together. And we see that in the fact that Ethereum's ultra-scale L2s, Mega and Rise, they are not in mainnet yet. They're making incredible progress. They're wonderful projects. And so if you're Paradigm and Stripe and you see an immediate go-to-market opportunity that, oh my God, we could be doing trillions in payments on the blockchain within a few short years, that's their bull case they articulate to themselves and their investors and their partners. Let's go to this. For all our criticism of the fact they didn't choose L2, because I think they were dishonest in their public comparisons of the benefits of L2s and the long-term trajectory of these technologies, the fact of the matter is that they literally can't get 10K TPS on L2 by Christmas. And they probably will by building a highly centralized, customized EVM, using the modular RETH execution and consensus client that Georgios and his team and collaborators developed. This is incredible technology. So, they're having a good go of it, but the fact is that their centralized L1 is going to add a major drag coefficient to their growth. And they're all like the toys on the shelf in the meme where every toy thinks he's a snowflake. But there's already like 4 or 5 of these upstarts. Like, are they going to work together? What about international competition? What about government partnerships? These are effectively privately owned L1s. They're not going to achieve any meaningful decentralization on a medium time horizon. I predict not a long time horizon. And on a short-term time horizon, it's just a corpo chain, man. It really is. And so when they talk about like finality, like time to finality, that would be an example of something that I think is relatively disingenuous argument on their behalf. Because they say, all right, well, Ethereum's time to finality is too slow. What finality do Alt L1s offer when their change management is effectively a corporate infrastructure upgrade process? They can rewrite history. We have seen in the last 18 months, major Alt L1s rewrite the history of their own app layer, where they will do like a hard fork in the dead of night, at least once, like literally overnight. And they have good intentions. They're fixing a bug in the app layer in a what they believe to be a critical, immutable contract. Great. Okay. But what if next time it's property rights? And what if the governments look at that and they say, wow, you guys are willing and able to rewrite history on your immutable chain. And this is the case for one of Ethereum's most major competitors that purports to be decentralized, that does have, relative to a corpo upstart, a much more decentralized, still centralized, but much on a relative basis, much more decentralized token ownership, operators. And so when you go far end of the other spectrum of these corpo chains, like their finality they talk about for fast finality, it's just trust me, bro, nonsense. And you see L2s like Arbitrum that pioneered a bond-based guarantee of inclusion, where for something like 4 or 5 years now on Arbitrum, when their centralized sequencer tells you the transaction's been included, they have a little receipt that if they don't include it, they like lose a lot of money. And so and then of course when it does finalize on Ethereum, like that's forever. That's forever, not like 100x more than a Corpo L1. It's like unfathomably more, like 1 billion times more, because you can't change Ethereum history. It's not possible. And so I think when we look at Ethereum's defensibility and the question of why is Ethereum still undervalued after this 3x gain, it's simply that the overall crypto industry pie, today at 4 trillion, is going to continue growing towards that, 20 plus trillion gold mark. And on-chain is going to get much more important, which will decrease Bitcoin dominance more than I think the bulls really and holders of Bitcoin expect. And then as the rest of the crypto continues to grow relative to Bitcoin, Ethereum is going to either maintain its Ether dominance in that on-chain segment or grow it, because the Ethereum side of the product menu is just so compelling. It is so much better than all L1. And, that's certainly true for our competitors that are losing on many key metrics like app capital growth. Like Ethereum recently added more stable coins in 1 week than any of our L2s had total. That shows the L1, L2 risk trade-off. But also over the same period of a little bit longer of several weeks, Ethereum will add more stable coins than any other one competitor has besides Tron, who still has less stable coins than us and way less ecosystem and on-chain economy diversity. Like Tron's a great business, but civilizationally it's a dead end because of centralization. And so there's just no alternative then for Ethereum to grow to a multi-trillion-dollar asset. And that's why when you buy Ether, you're buying not just like the future of my bags or your bags, or you're buying the future of the world at many layers of freedom, economy, investment. And so, I sleep very well at night believing that Ethereum is undervalued by today's standards as it was in April.
I think anyone with a moderate sense of risk management, whether they're holding some serious capital, hundreds of millions, billions of dollars, or whether, it's someone who's working with just a few $1,000s, there is an assurance that we have with Ethereum mainnet. There's a certain assurance we have with specific Ethereum L2s. There's different levels of confidence we have with different L1s, but the standout and the reason, you're pointing out the growth of app capital, the growth of liquidity, the trading volume that we see on an Ethereum mainnet, there's just a higher confidence level to be able to, retrieve your assets at any, moment. And that's very, very important. I can speak to the fact that my portfolio over the years has remained probably somewhere around 80 to 90% on Ethereum mainnet. I only in the last year started to deploy more capital to, the likes of Arbitrum, Base, Optimism. I had been playing with all of these L2s for years. I've been playing with Solana for years. Solana's different actually, because what I hold in Sol, let's say, it only makes sense to me to be putting that to work on Solana, because if I'm holding that Sol and Solana goes down, I mean, my Sol is going to be worthless anyway. So totally different approach there. But when it comes to my stablecoin liquidity, something that is not ETH denominated, I still think twice about where am I putting that capital to work. And I think your point around the deeper menu of options, the available DeFi that we find on Ethereum mainnet, because it tends to attract the best builders. It tends to attract the most, competitive, new and interesting ideas. And so there is a bigger metropolis of DeFi that is ultimately there on Ethereum mainnet. And that is, again, all due to the fact that we've got 10 years of uptime, and builders don't want to build on something that could potentially be compromised tomorrow, that is potentially going to not be reliable, for their users and investors. This is, though, probably a good segue into network upgrades. This has been a year where there's not just one major network upgrade, but there is two. Maybe that's the best way to frame it. Tell us, what is this Fusaka upgrade? What does it mean for Ethereum, the network? What does it mean for us as DeFi users? And when can we expect it?
Fusaka is tentatively scheduled to launch in early December, which is very exciting. It's an incredible achievement to have 2 hard forks for Ethereum in 1 year. I take the view that every hard fork should be like a moon landing level event that is telegraphed and socialized, and I think that drives eyeball reflexivity to maximize credible neutrality. I'm not a fan of fast hard forks in general, but there's a balance there to be struck, especially when this blob space saturation is a critical growth driver, or rather inhibitor, should it become saturated for us. And the only reason it's not saturated today is that ambitious L2s like Base have intentionally taken the foot off the gas pedal of growing their own TPS, because they know today's blob space can't handle that. And so, that's kind of them to leave some blobs for other people, because Base could buy every single blob as a loss leader to fuel their growth. Nobody wants that. And so I think there's been temperance and a high level of judgment among the L2s to share the scarce blobs we have today. And when you look at that blob growth chart, it does not represent organic demand. It represents inorganic, taking the foot off the gas pedal to slow the growth of these L2s that would rather be higher TPS today, but they're waiting for this Fusaka upgrade and future upgrades to unleash their capacity to grow while remaining fully on L1 as rollups to benefit from that, maximum closeness to the L1 and security. And, make no mistake of the measurable value of rollups. Rollups themselves have something like 98 to 99% of all L2 app capital. Rollups are a massive success story, and that's powered by blobs. And so Fusaka is going to launch initially with a range of EIPs, range of line item upgrades, and immediately when it launches, there will not be a blob space increase the way there was in the past hard fork. Instead, core devs have kind of cleverly scheduled it to automatically expand blob space in the coming weeks and months to a maximum target for now, and then future increases will require another, hard fork coordinated at the social layer like all other hard forks. So the benefit of blob space to grow Ethereum and harmonize the L1 and L2 model so that they're both being their best selves. Blobs are that connective tissue there primarily, and so Fusaka greatly increasing blob space is like a massive deal. So very, very exciting. And for me, something that I'm attentive of is Ethereum's reliability and credible neutrality is absolutely, to some degree priced in. And certainly Ethereum outages are not priced in. And as we learn to move faster and as these seasons unfold, as we're doing, we're going to do something now called a blob parameter only hard fork. I think it's called a BPO hard fork. That's where Ethereum hard forks, and the only thing that changes is either the blob target or the blob count, or the blob max. The max is like a burst. It's like how much over the short term, and the target is the long run average. That's the capacity. And so as we continue to do blob parameter only hard forks to grow blob space regularly outside of the ordinary hard fork cycle, and as we continue to do hard forks, we got to remember that reliability is what we sell. It is what we sell. And so I'm not a security reacher. I'm not a core dev. I'm not anywhere close to that world directly. But sometimes I see these calls for what I would describe as like exuberant launch dates, like let's ship it before Christmas. I mean, okay, if it's actually ready and now we're tentatively scheduling it for December 3rd, fantastic. But Ethereum must never have downtime or any material outage, and that's always got to be top of mind for us. And, the experts tell me that it is top of mind for them, and I trust them. But, I think just as a Twitter person, it's something that I think about a lot. And so really excited for Fusaka and the blob space increase. And, I think we could expect like massive TPS increases from our high scale L2s as that blob space goes up. So really, really exciting upgrade.
Ryan, I want to switch gears here a little bit and just zoom out a bit to the macro level here. I'm curious if you believe in cycles still. If you do, like, where do you think we are right now, and what factors are you looking at to sort of, tip off if we're getting close to the end of a cycle, if we're overheated, and whatnot?
Yeah, it's such a great question because for me, having been here materially since early 2017 on an investment basis and working full time in the space since mid 2018, the 4-year cycle dominated our psyche. And yet, personally, I think there's a lot of evidence that the 4-year cycle was effectively a coincidence. That when you look at things like the Bitcoin halving, like Bitcoin inflation used to print, and the miner sell pressure was like really significant. And Ethereum was proof of work, and Ethereum's sell pressure was really significant. And I think that these forces combined with things like the ICO craze and the DeFi NFT craze in 2021, I think that we happen to have these 4-year cycles. And I think the fundamental timeless pattern there is that cryptos, like physical gold, like fiat currencies, are primarily confidence-based assets, what we call stores of value. And that, I think it sometimes to pull that veil back a bit and say, all it means is we believe in it. It's just a confidence. I think it makes people sometimes a little uncomfortable. And yet, by recognizing that these are confidence-based assets, we can see that this cyclic behavior is probably going to endure forever. There's always going to be a much higher degree of volatility than we see in other asset classes. There's always going to be some amount of cyclic confidence that we see, even in the stock market that's supposed to be valued off discounted cash flows and not liking it. And so for me, the 4-year cycle is much more dead than alive. And yet the crypto cycle, or what I've kind of come to call seasons, is here to stay. And, I would caution anyone to underwrite their investments based on, number of years or expectation of history repeating instead of rhyming. I would caution anyone to look at, this as either up only, or we're doing something wrong, or up only, or I should feel bad about Ethereum or my bags. Like, there's an ebb and flow there driven by the confidence-based nature of these assets and the relatively illiquid markets at spot price, which probably, I'm not an expert in that by any means, but I get the sense that will continue to get better over time, as it has for example, gold. And then the reflexivity that, people follow trends, to say nothing of the hot ball of trader money that, believes in nothing and stands for nothing. It just follows around the trends and, contributing to reflexivity in both directions. And so, yeah, the 4-year cycle is much more dead than alive. And yet, this is crypto. The roller coaster is here to stay. You can't get off the roller coaster. So, yeah, I see both sides of it.
Yeah, totally. And I agree with a lot of the things you just said. I mean, there's a few other factors too. I mean, even just like the 4-year presidential cycle aligns, overlaps in some degree with the crypto cycle, and then like post 2008, this like business cycle also seems to sort of quasi align. I mean, I think there's a lot of things that might have been like, almost fogging up what was actually happening. There's clearly been bubbles. There's clearly been, hey, you get over your skis and, the bubble needs to deflate. But there's definitely some other things that have been working in the background as well. Okay, I want to get your ETH price target. I'm curious what you think, what your ETH price target will be for 2026. And, maybe even throw at a 2030 as well. And maybe even more importantly than the number is how do we get there?
Short-term price targets are obviously very difficult. I think ETH is still undervalued today. Primarily, I think the expression of that undervalue is in the ETH ratio relative to competitors, both Bitcoin as well as down market. I think the ETH ratio should be like way higher. It's going to take time to convince people of that, especially because we're never going to convince Bitcoiners of it on average. It's going to be new money. It's going to be new entrants who say, all right, I'm finally ready to look at this crypto thing. Here are my options. And as serious money does serious diligence, they're going to increasingly pick Ethereum, as we're already seeing this season, as we've seen in years past. And so short-term price target, really challenging. Obviously, there's a lot of tumultuousness in the world right now. I was reading an article yesterday saying that one of the major stock indexes, I think the S&P 500, recently hit an aggregate, probably market cap weighted PE ratio of 30. And this has never happened before in history except for once. That once was not the crash of 1929 when aggregate PE was 20. It was actually in the, I think, 8 to 12 quarters leading up to the dot-com bubble, from which, many stocks took a decade to recover. Chair of the Federal Reserve, Jay Powell, he said this week, stock prices are high on a historical basis. This is an objective fact. And that correlates, or some people would argue causes, on average reduced future returns. And make no mistake, cryptos are risk assets. When the NASDAQ tanks, when NVIDIA takes a 5% haircut from its 4.5 trillion, down a couple $100 billion with a PE of 50, a lifetime to earn back these historic AI capex glut. I'm not saying I'm bearish NVIDIA. I'm not an NVIDIA expert. All I'm saying is that these are objectively high prices historically. And we've just had a glorious run up here in crypto. And, historically speaking, and history rhymes, it doesn't repeat, but historically speaking, a run up is followed by either more running up or the other way. And so I just think we need to have some, not allow 2026 price targets to affect how we feel about our bags and our trajectory. We could see 8K in 2026. We could see 10K in 2026. Who knows which, oil-fueled dynasty, which Arabian prince is going to show up and, bless us with $100 billion market buy. Nobody knows. So I think in the short term, we play the hand that's dealt to us on an ongoing basis by this confluence of factors, both in traditional risk markets as well as secularly, as well as in Bitcoin. The defenders of the Bitcoin who buy a lot of Bitcoin, and Bitcoin enjoys some very deep-pocketed supporters who buy Bitcoin not with borrowed money or with investor money, but with their own money. Tether, Binance, Coinbase. These guys make their money on Ethereum and in other chains, and then they spend it on Bitcoin. There's a deep insight there. And so 2026, could be 8K, could be 10K, could be a crab market, could be whatever. We'll have to wait and see. 2030, that's where I get really excited over the 1 to 5 year horizon. I think we will see a Pico top on Ether in a 1 to 5 year horizon of at least 2 trillion, which is slightly less than Bitcoin is worth today. I think we get that off Ether Bitcoin ratio gains. I think we get that off crypto market cap growing from 4 trillion, upward to 5 or 6 trillion in today's dollars. All these price targets are in today's dollars. I'm not bull posting hyperinflation. I think we sustain multiple trillions in 3 to 8 years. And so for me, I look at where Bitcoin's at today, what it's been able to achieve and sustain. And I look at where gold is at and other major asset classes, such as we detailed in our report, ethdigitaloil.com. And I say, Ether is going to multiple trillions. And for me, that's my price target. My price target is global ubiquity, Ether itself being, a major worldwide asset.
So I am never betting against Bitcoin. I'm also long Bitcoin. I have all the faith in the world that Bitcoin continues to see a fairly aggressive bid. I think it's become, this default investment for folks that want to get exposure to crypto. I've never seen that as bearish for ETH. I've seen that as the opportunity. So with Bitcoin sitting today around 2.2 trillion in market cap, in 5 years for myself, I see that going up, to many more trillions. And I think the opportunity you called out is the comparison, the catch-up trade that is ETH, for folks to see that this is a store of value, but with so much more utility. This thing has all of the major finance innovations that I'm seeing on the news with stable coins and DeFi and real-world assets being tokenized. And, we've talked about something on the order of 800 trillion in total global assets that's there for the taking to tokenize. So even just a small percentage of that means trillions, tens of trillions, maybe on the order of 10 to 20 trillion dollars being tokenized on Ethereum in the form of RWAs and stable coins. And so for that reason, I see this catch-up trade with ETH. I think it's insulting to my own intelligence that it's not half the value of the Bitcoin network right now, even though I believe it can eclipse the value of the Bitcoin network at any point in the future. And so, to your point, price target in the short term, it's tough to discern who's going to outperform. ETH has been outperforming now for the past 6 months. It's been outperforming, I think, on the total of this entire year. So just a lot of opportunity there. I know when I spend any amount of ETH on gas, or if I'm thinking for any reason that I need to sell any ETH, which is very rare that I would be selling, I'm normally looking to be able to borrow against that if I need liquidity. I'm not looking at ETH at 4,000 or 4,500. I always think, what is this going to feel like when ETH is 100,000 one day? Maybe that's 10 years out, but that is going to be pure pain to think back that I spent whatever I did here. And again, we've lived through this with Bitcoin. I'm not pretending that ETH follows the exact same, price path as what Bitcoin went through. I'm basing it on the fundamentals of the utility that I see on the network, the total amount of tokenized value that's on that network, the total amount of global assets that looks to be tokenized, all of the major players that are leaning in. So I'm with you, Ryan. I think my targets are even that much higher, but I'm also much more confident in the next 5 to 10 years and seeing ETH go to, $100,000 to $200,000 per ETH in that time frame, probably on the order of 10 years. 5 years is a little short, but anyways, a lot of catch up for ETH to do relative to Bitcoin. A lot of outperformance, I think, to do against other L1s that have no way of going back in time to prove their trustworthiness, to prove their uptime. They've just got to earn it over the long term, the way that ETH has or Ethereum has. And to the credit of Bitcoin, the uptime that like a Bitcoin has earned.
I substantially agree with that. Bitcoin does not need to lose for Ethereum to win. That's a zero-sum mindset. We're in the growth game. We're looking to expand the pie for everybody. We're looking to elevate humanity. And so, for me, when I think of like a 2030 price target, I'm happy for Bitcoin to continue beating broader risk assets. I don't own any Bitcoin, and I haven't owned any Bitcoin in years, probably about, 7 years. And yet Bitcoin has earned its place on the charts. The great coalition building they've been doing with a great level of decentralization, with their work around digital gold. And if Bitcoin grows to, say 2030 price targets in today's dollars, I'm not gonna join the Bitcoin bulls and telling you it's going to $1 million a coin in today's dollars. But, to double again to 4.5 trillion, while Ethereum grows to 2.5 trillion over that time frame. Like, to me, that's everybody winning. And then, I would expect Ethereum to continue to outperform in the years ahead. And I absolutely believe in 100,000 a coin, in 10 trillion plus Ether. but I'm also willing to wait. That you know, I want us to have realistic expectations. You know, I believe deeply that people who get in earlier should make more money. Who believe in it earlier should make more money. And I have friends and family that got excited when ETH was at 4K. You know, the few times it was back in Q1 2024, back in 21, and you know, they bought in, and then they're way underwater. It's not a good feeling. And so for me, I think I'm looking for that gradual, significant year-over-year appreciation, you know, from 500 billion, trillion, 2 trillion, 4 trillion. I don't need it to happen over 5 years, and I would be suspicious if it did. So I don't think that makes me a bear. So I think everyone can win, and I think Ethereum can continue to outperform, you know, into the multi-trillions in due course.
I like that slow and steady approach, and I think we're nearly there. I think what we were missing was the bid from Wall Street with the ETH spot ETF still being a newer vehicle. So we're seeing more buying there. This is where the ETH treasury companies have been huge to me. They are so good at communicating and spreading the narrative for why you would hold ETH as a store of value. But then on top of that, they are so good at communicating the opportunity, the risk-free rate of staking. So you've got DeFi yield for the public markets wrapped in an equity. And that has been, for me, the biggest breakthrough in the last several months. It's definitely a part of the story of ETH price, you know, outperforming and you know, playing this sort of catch-up trade. All of the bells and whistles are going off in a lot of investors' heads. Things that we covered in our last podcast, you know, there were, if I'm just like reading through the chapters in our last discussion back in April, it was the Ethereum scaling roadmap is working, the value of decentralization, metrics that signal Ethereum is winning, like app capital. If everyone wants a faster, cheaper L1, why so much value on Ethereum? The impact of US regulators, the TLDR on the Ethereum L1 upgrades, what needs to happen for ETH price to go up, distractions this cycle versus getting back to our roots with crypto. You get it. There's a lot that we discussed, but a lot of these talking points, and I'm not saying that, you know, we called every one of these out in advance. What I'm trying to call out is that these are discussions that us and many of our friends, fellow investors in the space have been talking about for years, but it has taken a better sort of communication strategy. It's taken a more united front from the likes of the Ethereum Foundation to, you know, the teams behind these ETH treasury companies to, you know, voices that have always stood out in the Ethereum community, like Joe Lubin, you know, voices like Vitalik, of course. I've noticed Vitalik is getting more vocal again. You know, at times he's been the one to bear too much responsibility for responding on behalf of Ethereum. And I think now he's getting a little more vocal again, which is really helpful, I think, for, you know, the impact of his voice, the credibility that he brings. So we've got a lot of good times ahead. I think the fundamentals are there for us to go much higher right now, but to your point, it's a marathon, and I think we have to be patient. I think, though, this is a great place for us otherwise to wrap up. So first, I just want to remind our listeners, if you want to learn more from Ryan, if you want to follow all of the awesome takes he has, all of the teaching he does through Twitter, you should follow him at Ryan Berckmans. We'll put that into the show notes so you can easily find him. And then Ryan, thank you so much for coming on again. Great to have a follow-up. I'm always learning from you. There's just a lot that you think about and understanding the network and understanding how the network improves and remains unstoppable and uncensorable. These things are just so important. Anyways, any final word for us before we go?
Thank you for having me on the show. It's been the journey of a lifetime for me. I see us as, you know, midway through the journey. We've achieved so much, and I'm so grateful to everybody in the space, from the DAT leaders to the EF to, you know, the unknown builders who are in the trenches right now inventing the next big apps that, you know, you and I won't hear about for another, you know, 6 to 12 months. there's just so much firing on all cylinders for Ethereum right now. And we're seeing increased alignment around how to communicate Ethereum and Ether as a store of value with utility, the L1 plus L2 model, and the value of on-chain. And I have never before in my 7.5 years here been so excited for the trajectory and momentum of our community. And yeah, just really, really proud to be here.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.